Good afternoon, ladies and gentlemen. I would like to welcome on stage Thomas Atkinson, Chief Marketing Analyst from FX Evolution, who will do a workshop on unlocking smart money secrets, how to trade changing markets. Thomas, the stage is yours.
All right, well, thank you everybody for making it out to this amazing event. I hope that today we can impart some knowledge on you. Basically, what I want to be talking about today is something that changed me as a fundamental kind of like trader. It had a really big impact on me, and it made me start to think about markets in a totally different way. And that's why I kind of call it smart money secrets. Now, as we all know, I'll just go into, there we go. As we all know, when we get into trading and investing, we basically have this idea of what it is. Buy low, sell high, and it's just like super easy, yeah? We follow what the Reserve Bank tells us, we follow central banks around the world, and we just basically end up making millions of dollars. But we all know that this is not the way that, of course, trading works. And in general, we kind of have like, a story. So I thought I'd take you through a little bit about how I got into this industry, who I am. Some of you probably not familiar with me. Some of you may be that have come out today. And basically it all started when I grew up on a farm in rural Victoria, and I decided, like Warren Buffett did when he was young, that I would start my own little business. And that business was effectively that I would sell chestnuts that we got off our tree, and I'd take them to all of the different stores and houses, and I'd say basically, will you buy my chestnuts? That wasn't that successful, but some people took pity on me and they let me kind of make a few dollars. And that was kind of the genesis of, I guess, me getting interested in trading and investing just in general because it was business. Then at 16, we were faced with a very easy kind of question for me, which was, do you want to be part of a stock trading game? And I said, oh, that sounds interesting. So we did that at school. And around the same time, my dad gave me about $1,000, which seemed like the world to me. And he said, you can pick a couple of stocks. So like all of us, what do? Well, we pick the stocks that we know. So I basically made a decision. And I said, okay, well, I'm going to buy the television companies. That's what I saw. I thought, wouldn't it be great to make money off this ad revenue? So that's what I ended up doing. And that was where it began, kind of like my love of stock trading and investing and everything to do with it. And of course, I went through the normal steps by steps. We went and did the education, obviously built what I would say was a pretty good advisory book, which was well over $100 million. And I did that for a while, and I thought this was very fun. I enjoyed it and had a good time, and it taught me a lot about the markets. But then 2020 happened. And while I was doing all of this, I was also educating myself and building an education business on the side through my knowledge of meeting people in the industry. And a lot of you will get information imparted on you, and of course we're going to talk about one of these things today, that hopefully will help you define yourself as a trader and an investor. And for me, I founded that company and I realized the psychology of trading was that when the market crashes, what do we all do? Did everyone, how many people started trading around 2020 here? Anyone? A few of you in the crowd? Yeah, absolutely. And that's because, of course, a market crash brings volatility, brings excitement, and we all get in. So I went on YouTube, I went on the social media platforms, and I realized that most people producing content basically didn't have an idea about anything. They were mostly pump and dumps and all this other type of stuff. So I thought, well, why don't I try to do it? And I started making videos daily, and since then I pretty much made a video daily for 4 years straight, and I managed to build about 180,000 sub following. So pretty big on YouTube. You can check it out, FX Evolution, if you're interested after this. Now, this is where we get into a risk disclaimer, because of course we do have some content to go through, but I want you to just think about it. It doesn't mean you're going to go and buy or sell straight away or anything like that. So what are we covering? Well, we're looking at liquidity and market reversals. We're looking at volume profile tools. Is anyone familiar with a volume profile tool? Have you ever used one before? A couple of you? Absolutely. It's a great tool. I would suggest that you may want to use it after today. And then, of course, how do we optimize our investments and liquidity setups? So, like anything, when you're trying to get good or even great and the best at something, you must follow the best traders and investors. Now, there's, of course, Warren Buffett, there's Charlie Munger, we all know about them, Ray Dalio, but how many of you actually know Stanley Druckenmiller? Has anyone ever heard of Stanley Druckenmiller? A few of you know the Druck, very good. So here's the man. If you don't know, he obviously he pretty much came up with the trade that beat the kind of Bank of England back in the day on the pound, and also with Soros, and also he was known to be managing billions of dollars, but also averaged 30% per year plus on everything, all that money, whether it's up or down market. Now that's incredible. And I thought, this guy knows something. What does he know? What knowledge can he impart on us? And this was the quote that really changed, I think, my investment career. And it's a really weird quote in some ways, but like anything, there's a profound understanding within this quote. And he said, when I first got into the business, I was told, not by my mentor, that bulls make money, bears make money, and pigs get slaughtered. But I'm here to tell you I was a pig in my trading career, and that I believe it's the only way to make long-term returns that are better than the business. Now, why is this such an profound quote? Well, it comes back to the idea that I was thinking, why? I don't want to be a pig. I don't want to get slaughtered. Well, it's because you have to think about markets in a different way. You have to gain edge in markets. If you're just going to be a standard trader or an investor, you might as well just go buy the S&P 500. I mean, that's what Warren Buffett literally says. If you don't have edge, don't bother. So how do we get some edge in the markets? Well, this is where I started to think, well, where are the biggest trades? There's a lot of liquidity providers here today and brokers and stuff. It's kind of ironic I'm talking about some of these things, but I was asking myself the question, where are these biggest kind of trades coming in, and of course, how can we start to spot them? Now, has anyone ever traded here or invested in a market and it's gone directly against you straight away, you've lost your position, and then all of a sudden it goes shooting up and away? Has anyone ever had that happen to them? If you're being honest, like I'll say it's happened to me a lot, yeah? So I started to say, okay, well, that's being stop hunted. So we have to kind of understand, well, how does a bigger trader like Stanley Druckenmiller, build a position? Well, of course, he starts to be like a pig. He starts to think, I want to buy this stock and I want to buy it at a price. But he's not just trading a few $1,000 or $100,000, he's trading $1 billion position. And you cannot get $1 billion position in the market like this, especially in Australian liquidity. So let's take example here of Apple. We've got 3 lines, and one of those lines is green, one line is blue, and the other line is red. And basically what's happening is the market drops into that green line. And let's say Druckenmiller, he says, well, I like Apple. I think it's value at 120. And he'll set a level. He'll say, I buy a lot at 120, a little bit at 121, and a hell of a lot, and a lot less at 122. If it goes over 122, do you think he's going to be buying anymore? No, because it isn't within his parameters. So what will happen is it will create an ebb and flow in these markets, what we call market structure. And most people, when they're trading and investing, they don't even think about this in terms of the visual representation. But this is how you get these patterns, how you get setups. One of the most well-known ones is Wyckoff, which is a very good setup. So of course, once you start thinking about this and you start building this position, then you can start to think about, okay, well, if I know that there are institutions out there and they're building a position, and then as somebody spots that in the price action of the chart, they start to think, well, what's going on here? Maybe I want to own Apple at 120. Then they start to feed upon themselves. And that goes back to that quote that we were talking about when it comes to being a pig. Thinking outside the box and recognizing something before it actually moves, a profound concept. So this might be a little bit hard for you guys to see, but hopefully you can watch it in the video. And basically what this is it's something that comes in just even today with NVIDIA. It's a storyline and a trade of a narrative versus, of course, what the reality is. So here we have Meta. We're all familiar with Meta, Facebook, whatever you want to call it. And basically, only about 2 years ago, this stock was falling big time. I mean, it was absolutely collapsing. And then it suddenly had this earnings result, and it was like the worst earnings result you've ever seen. It was shocking. We came out, we've lost lots of money, we're not doing well, the forward guidance is bad, we're going to sack everybody. And then all of a sudden, a few days later, what did it do? It went boom, straight up. And you're left scratching your head as a retail investor saying, wait a second, it's a bad result, but the market went up. What just happened? Well, of course, somebody was being a pig. They were deciding that this was as low as the stock would go, and basically it was hitting maximum fear. And if all you take away from this talk today is that you need to stop thinking about the narratives when it comes to markets, and instead you need to be looking at what the reality of the price action is telling you, you will have more success. I'm telling you, it is absolutely a game-changing concept. And that's where I kind of coined this phrase that I have on my YouTube channel every day to 40 to 60,000 viewers. And basically it's patience, react, don't predict. Now you're told that reaction means you'll be behind, but actually what you should be looking for is traps. We're not that special as humans. We actually tend to fall into a few different personality types, and I believe we've got some speakers talking about this type of stuff today. And when we understand that we tend to be herd mentality, pack style investors as well, when we're picking bottoms or tops of markets, if we can do so and become a pig, we need to think about, well, are people feeling maximum fear? Was anyone feeling a lot of fear about 3 weeks ago in the markets? Being honest. Now it's of course, it wasn't as bad as we thought, but VIX 65, that is a profound level. I've only ever seen the VIX 65, and I've been trading since 2007, like very heavily in the markets. I've only ever seen that happen 3 times in my trading career. But when it happened, I had a plan. And of course, I was doing a massive live stream at the time to about 5,000 people. And basically, this was like, I came up and I showed everyone all the markets were hitting key levels at the same time. They all hit these key levels, whether it was silver, whether it was S&P 500, whether it was anything. And because if you enacted and you knew that that was a key level using volume profiles and other stuff, you may have been able to make a good decision. So here's another example this year, Tesla. Well-known stock, few of you guys probably like it. Tesla profit plunges 55% as shares bounce on a plan of cheaper vehicles. Now, if you know Elon Musk and you know everything about robo-taxis, you'd know that every single year Elon Musk comes out and says, robo-taxis this year, robo-taxis this year. So the reason why it went up is not because of the cheaper vehicle. It went up because it was heavily sold. The fear was big in this stock. So again, the narrative is terrible, terrible, terrible. But the price action does something else. And when you see these types of price action moves, when you see the narrative is bad and the price action's going the opposite direction, these are actually profound points where you can be a pig in markets. And if you start thinking about this and you start creating replication setups around these levels, you'll be surprised. Everyone know NVIDIA? Anyone look at the earnings result today? Pretty much a classic case. We'll talk about it in a moment. But basically here we have NVIDIA, and earlier this year it went up 80+% over only a couple of months. A historic move. We're talking $1 trillion asset going on top, and we had a very big announcement. Now this wasn't earnings. Earnings was great. Earnings was actually not bad today as well, but we'll talk about that in a moment. And then we had a stock split. Now, does anyone know the stats behind stock splits? Probably not. I love stats. So one of the things behind stock splits is it's quite well known that a stock split brings the bulls over the next 12 to 18 months generally. It actually brings a slight bigger edge on that stock because, of course, the price goes down, becomes cheaper for retail investors, and they tend to buy into it. So that worked for a few days. The stock went up, and then all of a sudden, we saw a massive sell-off. Look at this. In only a few days, we literally saw 15% getting wiped off the market just like that. Now, who do we think that could be? Could that be a pig deciding that maybe NVIDIA's a little bit overpriced right now and showing themselves? Selling into retail? Do you think retail was feeling pretty bullish about this? Of course we were. So this huge move is actually replicable. And if you look through the charts and you look at high quality stocks, when they sell off around 15 to 18% very quickly, it tends to always follow a similar path. And again, this is why it's so profound to start not following the narratives of what we're being told, but instead be following the price action, the flows, the options moves, these types of things. So you can see here the market initially buys the dip, fantastic. But at this point on our channel, I was talking about the potential of the next 1 to 3 months being sideways to down for the stock. And that's because this particular setup told me, and it said to me, you know what, I know that this stock is going to consolidate to sell off because somebody has decided it's overpriced for now. The rest is history. Only a few weeks ago, we were sitting in the 90s for NVIDIA, and of course, it became a great buying opportunity. But this is the point. The point is when it comes to trading and investing, when it comes to doing this and really taking it seriously, you've got to put the work in. It's being patient, reacting, and not predicting. And what you're doing is you're finding key levels of interest, and you're going to have to put the hard work coming in, which is basically in the preparation. And I always say this to all our students. I say you've got to prepare. Every day you've got to set your alerts. It doesn't mean you have to be a slave to the charts, but you've got to put in the work. And it comes to the aha moment. So volume profiles are something that you can get in a lot of your trading software. TradingView in particular has it. And this is a very, very good indicator. So basically what it does is it shows us on the charts where the biggest levels of trade volume have gone through. So where effectively the large pigs, in this case, the large investors and traders have actually started buying positions. So when you put a volume profile on your chart, it's going to look something like this. Everyone seen something like this before? Maybe in analysis? I know it's a small screen, but hopefully you can see it. And what this shows you is it shows you effectively the nodes, the price levels in a very visual format, and because we're humans, we love visual formats. And it shows us kind of like, where are the largest trades, and shouldn't we potentially be looking for setups around those levels? And there's a line there that I want you to focus on called the point of control. So volume areas, they come like this. If you're ever interested basically in these slides as well, I'll send them through to people if they send me a message. But basically there's these three key zones. We won't go through that, but what I want to just show you here is the visual representation of that red line. Can you see how the red line, the POC, the point of control, there is a reaction there? And notice I've got this red arrow pointing towards one of the most well-known technical analysis candlesticks, which is a hammer. And effectively the market has rallied off that point. Well, that's probably someone deciding, you know what, I love that price, I love Pepsi at that price, and I'm going to buy a ton of that. And that's pushed it up. If you think it's unique to stocks, it isn't. This is copper. Pretty interesting kind of trade. You can see here I've done a volume profile analysis, and again the market's come up at some point in the future and it's absolutely sold off that red line. So if you haven't ever used this, you really want to start thinking about using volume profiles. So let's shake it up and think about that news article kind of concept. Here's SEEK. We all know this is Australian stock, not an American stock this time. And what we saw that SEEK only a few weeks ago, maybe a month ago, was basically giving a really bad, what looked like a bad earnings result. Not too good. The big articles were saying, oh, it's terrible, it's so bad. Yet what did the stock do? The stock rallied off that result. And you can see here that classic huge bullish hammer, that big wick coming off. But what if we overlay a volume profile? Well, of course, here it is. And there's the volume profile. Notice where that point of control is, that big red line. It goes smashing through, which means basically the biggest funds in the world and in Australia were purchasing or at least making a decision at that point. There was a lot of transactions going on. So there's a lot of transactions going on at that price, we know that. There's a bad news result and we get a massive wick candle. Could that be an area which we are now suddenly interested in? And again, 95% of retail traders will be too scared to buy it. Well, my argument would be, of course, I believe so. And that's what being a pig is. If you get something out of this talk, that's what I'd be trying to do. Another one of my favorite quotes here is, my attitude is that I always want to be better prepared than someone I'm competing against. The way I prepare myself is by doing my work each and every night. Now, it doesn't mean that you've got to be a slave to the charts, but you do need to start putting in the work, and you have to be, again, patient. If you look at Warren Buffett, Stanley Druckenmiller, Ray Dalio, any of these great investors and traders of time, they're actually quite boring. And that's because their temperament is just like, you could give them extreme greed in the markets, they'd be like flatlining. If you could give them extreme fear, and they'd be flatlining, because they're able to make decisions that they've already thought about. They're ready for these levels. They know exactly what they're going to do. Here's some of the volume profiles that I would suggest you consider putting on. Again, you can check this out in the video. And I just want to mention here as well that whenever you're using these volume profiles or these tools, one of the best things that I ever was told was that you have to complete, as human beings, we have to complete 40 reps. So basically 40 replications of the same trade. Once we've done that, we tend to know our stats and our odds. Most people stop at 10 to 15. And I think quite a few of you have probably done that before. You've got this new exciting system, you've given it a chance, win, 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 loss, oh, I give up. Or loss, 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 I give up. That's not enough. So you've got to think about that. So of course, replication is the key. The two major setups that I always talk about are Wyckoff accumulation distribution, what we call the lightning bolt. This is what Wyckoff is. We don't have time to talk about that, but we do have time to just quickly mention here that you want to be buying, instead of buying the dip in the future, what you want to do is you want to buy the change, the V, okay? So if you bought one price, let's say it was that 120 on Apple, You don't want to buy the initial 120 on Apple. You want to see the market create structure and then show the momentum to go into the positive direction. Just like we saw on Seek, just like we saw on Tesla. When it was rallying and it was going up, don't buy the dip, buy the V. Okay? It's very important. And these are things that made a huge difference to me. All right, well, I guess that kind of brings us to the end. I think I just ran in time. I hope you enjoyed today. If, of course, there's any questions that I can answer, I'll do that now. And if you want to add me on LinkedIn or get the slides or whatever, you can do so. So thank you so much for coming out, guys. I hope you enjoyed the speech, and yeah, thank you. Cool. All right, any questions anyone want to ask? Yep. Atkinson. Yes. So Atkinson. Yeah, absolutely. Yep. Good question. Yeah.
Sorry, there's no more seat, so I'm just going to stand here. Thank you for Atkinson for your presentations.
No worries.
I've been trading for about like 3 years, and I've been researching Rover profile for the same amount of time. I just want to have your experience on which market you usually measure the Rover profile, because we have CFD markets, we have stock markets, and derivative markets. Each of them has a different profile and different level of liquidity. And that is the first question. The second question is, where do you draw the line on measuring the Rover profile? Are you measuring from all-time high, all-time low, or on a weekly basis? Thank you.
Great questions, man. Yeah, so you're completely correct. Basically, the question is, there are three main, let's say the S&P 500. You've got ES futures, you've got US 500, which is the code a lot of brokers use, and then you've got the SPX or the SPY. So there's like 4 different main codes. Which one do you use? So I believe we're in a 24/5 market now, so I would use probably something like ES futures to do a lot of my volume profile work. The reason is because when you think about it, the market, the real market, that is when it's open, that will actually be trading, as in you'll see a huge amount of volume going through, but then after hours you're going to see a lot of money actually creating, and it'll create like the structure zone in the markets. Now over 30% of all transactions are going through after hours now. That's only going to increase over the next coming years, and as more people love the US markets and things like that. So I think that firstly I would probably do futures to answer the question, but I would still also use a little bit of maybe SPX just to see whether they line up, yeah? But if you're going to say which one, ES futures. Second question is about, sorry, just remind me of that one. It was the, oh yeah, so the all-time, yeah, so don't use visible range, that's terrible. Instead measure from the last swings. So what you want to do is low swing to high swing, or the structure itself. You'll notice in the slide in copper, I did the structure. Yeah, massive deal, yeah, doing that. So low to high swings, the last swing, most important. Then also do the whole structure itself and see whether they line up. If they do, good. Yeah, great questions. Yes? Yeah, it's a good question. So you've, again, thinking like a pig, thinking like an institutional investor, these guys don't realistically trade on 1 hour charts. They have algos, of course, but you want to go weekly, definitely weekly should be your start. So weekly, daily, and then you can come up with an idea and then trade the smaller timeframes. Yeah, so always I go top down, weekly into daily, and then the rest. Cool, great question. All right, I better let some other people talk. So thank you very much, and yeah. Love to connect with a lot of you. Thank you very much, guys.